Hey everyone, welcome back. Something big just happened and it could directly impact your wallet, especially if you're retired, working for tips, or just trying to make ends meet. President Trump and House Republicans have just introduced a major new tax and spending bill. While the headlines are all over a few flashy parts, there's actually a lot more going on under the surface. For instance, did you know this bill could include a $4,000 bonus deduction for seniors and no more federal income tax on tips or overtime? Yep, it's not just about corporations this time. These are real changes that could show up in your paycheck or tax return. So if you're feeling squeezed by inflation or rising costs, this bill might actually offer a little financial breathing room. Whether it will work or not, that's another story. But it's definitely worth understanding what's inside and how it might affect your everyday life. Stick with me, we're going to break this down in simple terms and, more importantly, show you what it could mean for you. Before we dive in, I'd love to hear from you in the comments. What's the number one thing you wish the government would change about taxes or Social Security? Let's talk about it below. And if you find this helpful, don't forget to subscribe for more easy-to-follow updates just like this. So, let's get into the heart of the bill. Many of you probably remember the 2017 Trump tax cuts lower income tax rates, a higher standard deduction, and big changes for businesses. Well, those cuts are set to expire at the end of 2025. And if nothing happens, most Americans will actually see their taxes go up. This new bill aims to stop that from happening. Not only would it extend those cuts, it would expand them. For example, the standard deduction would go up by $1,000 for single filers and $2,000 for married couples. That may not sound like much, but it means more of your income wouldn't be taxed at all. So if you're on a tight budget, this change could shrink your tax bill next April. The bill also increases the pass-through deduction for small business owners and freelancers. Right now, you might be able to deduct 20% of your business income. Under the new plan, that bumps up to 23%. That's a big help for gig workers, independent contractors, and small business owners. But let's talk about the most headline-grabbing part, the populist tax breaks. These are the changes meant to feel immediate and personal, like the provision to make tips tax-free. Yes, really. If you're a server, bartender, hairstylist, or anyone who earns tips, you wouldn't have to pay federal income tax on them anymore as long as you make under $160,000 a year. That covers most people in those fields. And it's not just tips. Overtime pay would also be tax-free under this bill. Now, keep in mind, Social Security and Medicare taxes would still apply. But for regular income tax, that extra effort at work could mean you keep more of your money.
This idea is meant to reward hard work, to say, if you're putting in extra time, you should get to keep more of what you earn. Smart politics, but also something that could genuinely raise take-home pay for millions of workers. Now, what if you're retired or getting close? This bill introduces a new $4,000 senior deduction, a bonus standard deduction for people aged 65 and older. Trump had previously floated the idea of eliminating taxes on Social Security entirely. That's not in this bill, but this extra $4,000 deduction still matters. It could reduce your taxable income, which might mean less tax on your pension or Social Security benefits, especially if you're living on a fixed income. The deduction does phase out at higher income levels, so it's targeted toward middle and lower-income seniors, the ones trying to stretch every dollar for housing, groceries, and medical bills. There's also a new deduction for car loan interest but only if the car is made in America. You could deduct up to $10,000 in interest, which could be a big help if you just bought a vehicle and are facing high monthly payments. Again, this benefit phases out for high earners. Most of the bill is focused on what they're calling working-class Americans. Another interesting piece? Something called MAGA accounts. These are savings accounts for kids under 8 years old. Each child would get $1,000 automatically, and families could contribute up to $5,000 per year tax-free. That money could be used for education, buying a home, starting a business, or job training. It's kind of like the baby bonds Democrats have proposed, but with a conservative twist. This version focuses more on personal responsibility and entrepreneurship. So if you're a parent or grandparent thinking about your child's future, this might be worth keeping an eye on. Now let's talk about something stirring up drama within the Republican Party, the SALT deduction, cap. Back in 2017, the deduction for state and local taxes SALT was capped at $10,000. That hurt people in high-tax states like California and New York. This bill raises the cap to $30,000, but only for those making under $400,000 a year. That's an improvement, but not everyone's happy. Some lawmakers want the cap completely eliminated, while others argue raising it just benefits wealthy people in blue states. So yeah, real tug-of-war going on. There's also a major rollback on green energy subsidies. Tax credits for electric vehicles, wind, and solar would be cut or phased out. Instead, the bill shifts the focus back to traditional industries like manufacturing and defense. So if you were planning to buy an EV and were counting on that $7,500 tax credit, that might be going away. One new and controversial idea is a 5% tax on money sent overseas through remittances. This wouldn't apply to U.S. citizens, but it would affect many immigrants sending money to family abroad. Critics say this could hurt vulnerable workers, while Republicans argue it's a way to raise revenue and keep more money in the U.S. economy. Another surprise? A sharp tax hike on elite universities with massive endowments. Their investment income would now be taxed at up to 21%, up from about 1.4%. The idea is that some colleges have become too powerful, too political, and too unaccountable, and lawmakers want that money to be used differently. And to top it all off, the bill includes a $4 trillion increase to the debt ceiling. It's not flashy, but it's critical to avoid a government shutdown or debt default, giving Congress more room to negotiate without last-minute crises. So where does that leave us? This bill clearly aims to help working families, retirees, and everyday Americans with tax-free tips, higher deductions, and new savings options. But it's not without controversy. From rolling back clean energy to taxing remittances and universities, the bill could spark real debate. What this means for you depends on your age, income, job, and where you live. Bottom line, your taxes could be changing in a big way and soon. So what do you think? Would tax-free tips or a bigger deduction help you out? Would you consider a MAGA account for your kids? Drop a comment below. I really want to hear how this connects to your life, and if this helped you understand what's going on. Don't forget to like and subscribe, because I'll be here to walk you through all of it every step of the way. Thanks for watching, and I'll see you next time.